Here's a question that will change how you see the world. What if I told you that World War I didn't start because of the assassination of Archduke Franz Ferdinand, but because the global banking system was 72 hours away from a total collapse? In the next few minutes, you will discover how the most devastating war in human history until then was, in fact, the biggest bank bailout ever orchestrated, and how that same playbook is being used today, right under your nose. In July 1914, 3 days before the first shot was fired, something extraordinary happened. All major European stock exchanges closed simultaneously. Not because of the war. The war hadn't started yet. They closed because the international financial system was imploding. This is not the version you learned in school. What you're about to discover will explain why your savings constantly lose value, why financial crises happen with mathematical regularity, and why it's always the same groups that benefit from the chaos. Prepare to see the global financial system as it truly is, a wealth transfer machine disguised as a free economy. To understand what really happened in 1914, you need to go back to 1907. That year, the United States suffered what they called the Panic of 1907, a financial crisis so severe that J.P. Morgan literally locked the main New York bankers in his library until they agreed to save the system. But here's what no one tells you. The crisis was never really resolved. It was just postponed. Between 1907 and 1914, something sinister was happening behind the scenes of the global financial system. European central banks were caught in a deadly trap. They had expanded credit so aggressively that any significant contraction would cause a cascading collapse. The gold standard, which supposedly guaranteed stability, had become a straitjacket. Countries were caught between two impossible choices: maintain the gold standard and watch their economies implode, or abandon it and destroy international confidence. Here's what they don't want you to realize. In June 1914, Germany was facing such a severe liquidity crisis that its banks were secretly selling gold to London. France was in a similar situation. The Austro-Hungarian Empire, technically bankrupt. But most revealing of all, in the 3 months before the assassination in Sarajevo, European central bankers met in secret 7 times. 7 secret meetings. What they were discussing was not foreign policy. It was financial survival. Here's a fact that will shock you. Between January and June 1914, German banks increased their gold reserves by 47%. Not because they were prosperous, but because they were desperate. They knew a bank run was coming. The Reichsbank had lent so much money for real estate speculation in Berlin that 60% of its assets were backed by properties no one could sell. In France, the situation was even worse. Credit Lyonnais had financed so much colonial expansion that its real reserves represented only 12% of deposits. If just 1 in 8 depositors asked for their money back, France's most prestigious bank would collapse. And in England, the Bank of England was secretly buying British government bonds with money that didn't exist, inflating a public debt bubble that would make the 2008 crisis look like a scratch. Here's where the story gets really interesting. There's a document few historians mention. The minutes of the Bank of England meeting on July 21st, 1914, 5 days before Austria-Hungary declared war on Serbia. In that meeting, the bank governor said something extraordinary. The current situation offers a unique opportunity to solve our structural problems. Not political problems, structural problems. Let's connect the dots that no one connects. Point 1. In 1913, the Federal Reserve was created in the U.S., not coincidentally, right after the panic of 1907. But the Fed needed a crisis to justify its existence and extraordinary powers. Point 2. Between January and July 1914, European central banks coordinated the largest credit expansion in history until then. Why? Because they knew a massive contraction was coming. Point 3. 3 weeks before the assassination in Sarajevo, the Rothschilds liquidated massive positions in Russian and Austro-Hungarian bonds. They knew something. Point 4. The Archduke's assassination happened on June 28th, but military mobilization orders were only issued on July 30th, more than a month later. What happened in that month? Meetings, many meetings, among bankers. Here's the most damning evidence. In the Deutsche Bank archives, discovered only in 1987, there is a letter dated July 15th, 1914, 2 weeks before the war began, where the director writes to a colleague, "The extraordinary measures we discussed will be implemented as soon as hostilities begin. Our liquidity situation will be resolved within 30 days. How did he know there would be hostilities? How did he know they would last at least 30 days? How did he know they would solve liquidity problems? Here's the pattern they don't want you to see. Every major war of the last 200 years was preceded by a financial crisis that seemed insoluble through conventional means. Napoleonic Wars, preceded by the collapse of the French banking system in 1805. American Civil War, preceded by the Panic of 1857. World War II, preceded by the Great Depression. Vietnam War, preceded by the 1960 dollar crisis. The pattern is so consistent that it's statistically impossible to be a coincidence. Now I'm going to show you exactly how a war works as the perfect bank bailout. It's a four-step mechanism that is still used today. Step 1. Suspension of normal rules. The moment war was declared, all European countries did the same thing. They temporarily suspended the gold standard. Suddenly, central banks could print money without limits. The liquidity problem? Instantly solved. But here's the detail no one mentions. This suspension was coordinated. On the same day, August 4th, 1914, England, France, Germany, and Austria. Hungary suspended the gold standard. Countries that were supposedly mortal enemies made the same financial decision on the same day. Coincidence? Step 2, nationalization of private debt. Here's the brilliant part. Governments took over private bank debts in the name of the war effort. Debts that were unpayable in peacetime became patriotic investments in wartime. In Germany, the government took over 89% of Deutsche Bank's debts. In France, 76% of Credit Lyonnais' debts. In England, the government bought $847 million in toxic bonds from banks, the equivalent of $2.3 trillion today. Step 3. Creation of artificial demand. War creates instant and massive demand for everything. Steel, food, ammunition, uniforms, ships. Suddenly, factories that were closing due to lack of demand were operating 24 hours a day. The overproduction problem solved. But here's the kicker. Who controlled these factories? The same financial groups that were bankrupt 3 months earlier. Krupp in Germany, Schneider in France, Vickers in England, all owned or financed by the banks that had been rescued. Step 4. Redistribution of wealth via inflation. With central banks printing money without limits, inflation transferred wealth from savers to debtors, mainly banks and governments. Creditors were silently expropriated. Between 1914 and 1918, the purchasing power of European currencies fell by an average of 73%. This means that anyone who had savings lost 3/4 of their wealth. Where did that money go? To the banks that could now pay their debts with inflated money. This is the part where it gets really interesting. This mechanism is so effective that it was used again in 1939, in 2001 and 2008, and, well, you can guess when the last time was. While you're watching this, the same playbook is being executed in real time. I'll show you how. 2019, global financial system facing liquidity problems. Fed begins emergency repo operations in September, 4 months before any virus. They injected $6.6 trillion into the banking system before March 2020. Why did no one talk about this? 2020. Public health emergency justifies the largest monetary expansion in history. Coincidence? The Fed printed more money in 2020 than in the previous 107 years of its existence combined. 2022. Geopolitical conflict justifies more money printing and capital controls. Suddenly, freezing entire countries' assets becomes normal. 2024. We are here. And the pattern is repeating. Here's what happens when you follow the money. Every crisis of the last 15 years has resulted in the same solution: more power for central banks, more government debt, more control over the financial system. World War I was not a political event that had economic consequences. It was an economic event that used politics as a disguise. And here's the truth that will change how you make financial decisions. The current system was not designed to be stable. It was designed to create crises that justify bailouts. Think about it. Since 1914, how many times have you heard that the financial system was on the verge of collapse and needed to be saved? 1929, 1971, 1987, 2001, 2008, 2020. Each bailout concentrates more power in the hands of fewer people. Each emergency normalizes measures that would be unthinkable in normal times. The thing they don't want you to realize is you are not living in a free market economy. You are living in a system of crony capitalism disguised as democracy, where losses are socialized and profits are privatized. Here's a fact that will scare you. Since 1914, the wealth of the richest 1% has increased by 3,400%. The wealth of the poorest 50%, it has decreased by 47%. This is not an accident. It is by design. Every war, every crisis, every emergency accelerates this transfer. And now you know why. Let me give you the tools to recognize when this playbook is being executed. Sign 1. Liquidity problems in the banking system appear months before any official crisis. Watch the repo markets. When banks stop lending to each other, something big is coming. Sign 2. Emergency meetings between central bankers increased dramatically. In 2019, there were 23 unscheduled meetings between the Fed, ECB, Bank of Japan, and Bank of England. In normal years, there are 3 per 4. Sign 3. Financial media begins to prepare the public for extraordinary measures. Suddenly, articles about unconventional tools appear everywhere. Sign 4. Politicians start talking about existential threats that require national unity. The enemy can change. Terrorists, viruses, climate change, other countries. But the solution is always the same: more centralized power. Sign 5. Safe assets start behaving strangely. When gold, government bonds, and even cash start fluctuating violently, it's because someone with a lot of money knows something you don't. So what does this mean for you? First, understand that we live in a system where crises are not bugs. They are features. They are the mechanism by which wealth is transferred from bottom to top. Second, stop expecting them to solve the problems. They are the problem. The system is not broken. It is working exactly as designed. Third, and most importantly, your financial strategy must be based on the reality of the system, not on the official narrative. This means protecting yourself against inflation, diversifying outside the traditional banking system, and understanding that emergencies are opportunities for those who are prepared. Here's your action plan. Start thinking like the bankers thought in 1914. They knew a crisis was coming, so they positioned themselves to benefit from it. You can do the same. Study assets that perform well during crises. Understand how inflation really works. Learn to read the signs that precede each emergency. And most importantly, stop trusting institutions that profit from your ignorance. World War I taught us that no crisis is too big to be wasted. The question is, will you be the rescued or the rescuer? Here's your final question. If this pattern has been repeating for over 100 years, and if you can now see it, what's your next move? Because while you were watching this, the clock didn't stop. And the next emergency is already being planned. The only difference is that now you know what's really happening. And knowledge, when applied correctly, is the only real form of financial freedom in a system designed to keep you dependent. The game hasn't changed in 110 years. But now you know the rules, and when you know the rules, you can play to win.